All right, so Algo's the chart that I'm probably the least familiar with right at this moment. So we'll start with Algorand, and hopefully it'll just get better from there. All right, first thing I do is I throw on the easy bands. I want to see where is this actually trading at in relation to where the market has been pricing it over the last 21 weeks or so. And we
by the
see
way, people,
it is
those are his indicators. If you don't know, those are his indicators. Links down below if you want to catch on to it and join his premium Discord.
Yeah, thanks. I appreciate that. Yeah. So this essentially just shows us, where the market becomes oversold and when it's overbought. And this can just be very revealing. A lot of times you're somewhere in the middle, but when you're at one of these extremes and you feel extraordinarily, you feel like this is only going to go vertical and it's just going to keep climbing up. This tells you, hey, that's probably not realistic. We're overbought right now. We're not even within the bounds of these bands. And we spend historically very, very, very little time outside the bounds of these bands. If we actually measure how much time we were outside of these bands, it was like 14 days here, maybe 30 days here, a couple of days up there. And then on the downside, you get a couple of wicks over here. And then we saw an extended stay of around 30 to 40 days, kind of straddling this green easy band line. So historically, that you don't spend a ton of time outside of these bands in either direction. So this is obviously a time where things are overbought. We need to consider taking profits. When down here is a time where things look like they're going to zero. Things are very oversold. The market is panicking. Usually when the market panics, it's actually a pretty decent time to buy. This one has been a little bit of a nastier capitulation because we just kind of grinded down and bled out slowly. And obviously, if you're buying that up, you're just kind of, getting eaten up by this bear market here. But in the future bull market, I still think that these will be pretty decent levels to have actually bought. And you're buying at considerably lower levels down here at around 30 cents, as opposed to buying at $1.90 up to $2.50, right? This is at bare minimum. We do not buy up here. There's no good reason to be buying when we're overbought. And really down here, we don't want to be necessarily capitulating. If we're selling in the green easy band region, we're probably selling somewhat close to a bottom. Now, the bottom could still be a ways away, but again, this is much closer to the bottom than up there. So we don't want to necessarily capitulate down towards the green easy band. So where we're actually at right now, slightly above it, there's a little bit of downside risk. We could see levels between 16 and 20 cents if we get some sort of a capitulation. Otherwise, if we get a bullish move, kind of where we'd start to see that first line of resistance would be around 48 to 63 cents. And that would be, a bear market rally type situation. If we get a bear market rally, I don't think we're just going to zip right up into a bull market from here and go right back to $2. I don't think that's realistic. But if we do get a little bull market rally and things start easing back up, we could definitely revisit some of these, these prior levels. Maybe in a really bullish situation, come back and retest those lows of 67 cents. And that's in a really, really nice bull market rally. But right now, I don't love an accumulation here. I always try to buy spot for the long term down here in the green easy band. So I'd like to see a capitulation down there before averaging in for a longer term position.